Hello and welcome to this session in which we will discuss the required supplementary information other than MD&A when it comes to the annual comprehensive financial report for governmental accounting. So the RSI, the required supplementary information, is part of the annual comprehensive report. First, we're going to discuss what's included in there. Then I'm going to show you the actual annual comprehensive report for the city of Philadelphia. So the RSI would required to issue or to show, which is mandatory, that's why it's called required. Required means mandatory, information that include the preceding financial statements. So it's going to include information about the financial statements, including MD&A, and the information provided after the core financial statement. So include information from both. But specifically, it's going to show you budgetary comparison, and we're going to see exactly which budgetary comparison. It's gonna show detailed regarding infrastructure if you are using the modified approach. It's going to show information about the pensions, and most government, they have pensions, and a statistical section if the government provide a statistical section. In this session, I'm going to go over what's included in each section. Then at the end, I will show you the annual comprehensive financial report for the city of Philadelphia to get you a good picture of what it looks like. How does it fit in the annual comprehensive financial report? Let's go ahead and get started by discussing what's included in the budgetary comparison. Before we proceed any further, I have a public announcement about my company, farhatlectures.com. Farhat Accounting Lectures is a supplemental educational tool that's going to help you with your CPA exam preparation as well as your accounting courses. My CPA material is aligned with your CPA review course such as Becker, Roger, Wiley, Gleam, Miles. My accounting courses are aligned with your accounting courses broken down by chapter and topics. My resources consist of lectures, multiple choice questions, true-false questions, as well as exercises. Go ahead, start your free trial today. Under the budgetary comparison, you are required to have a budgetary comparison for the general fund and any special revenue fund and major special revenue fund with legally adopted annual budget. You have to have those budgetary comparison. Now, could you have budgetary comparison for other funds? You can if you want to. And this can be presented as the either supplementary information or in the financial statement themselves if you choose to. The budgetary information must include the original budget, any changes in the budget, any amended budget, and the actual figures. Now, do you have to prepare a variance? So because if you're showing the actual, if you're showing the final and the amended, do you also have to show the variance? In other words, what happened? Is it a favorable variance or unfavorable variance? For example, for revenue, did we generate more revenue than what's in the budget or less? For expenditure, did we incur more expenditure or less? Do you show the variance? The variances is optional. You can show them in in another place, which we'll see later, but the variances will be there. So budgetary comparison can either use the GAAP budgetary or any format that the government chooses, but they will have to reconcile back to GAAP. So show them properly. Notes in the required supplementary information should disclose instances where expenditure greater than appropriation for individual fund. So simply put, you have to show if you spend more money than what you appropriated for the individual fund. Why? Because you went over budget. You spent more. Citizens are interested in that. Highlight this piece of information in the budgetary comparison. And again, I will show you in the city of Philadelphia what it looks like. Show you a sample. Infrastructure information. If you're using the modified approach for reporting infrastructure, you are required to disclose the assessed condition of the infrastructure. Now, what is the modified approach? The modified approach is when you don't depreciate your capital asset. It's when you don't depreciate your infrastructure. If that's the case, you have to assess the condition of the infrastructure. And as a result, you have to mention this. You have to mention the assessed condition. Is it good? Is the infrastructure good, poor? What condition is it in? The estimated annual amount allocated for maintaining and preserving infrastructure for the past 5 years. Also, since you are not showing us depreciation, you have to show us what was the expenses, the annual amount allocated. How much money did you allocated to preserve this infrastructure for the past 5 years? That's important. Also, you have to show how did you measure the condition. Did you use engineers? Did you use people who work for the government? Did you find contractors? How did you assess the conditions of the infrastructure and the specific condition level at which the government intend to sustain the infrastructure, and how far are you going in sustaining those infrastructures? Also, part of the required supplementary information is discussing pension. Pension is a major issue for government. Why? Because government employees, they receive a pension. Pension is when you pay your employees post-retirement. And this could be a major expenditure for government, That's why. So therefore, you would need to show the most recent 10 years of pension information, breakdown of the changes in the net pension liability. So what's your net liability for the past 10 years? How large is that? How is it changing? Again, this is a big expenditure, a major expenditure for the government. Also, you need to know information about the component of the pension liabilities, including ratios like the pension plan fiduciary net position expressed as a percentage of the pension liability. How much of the fiduciary net position, how much are you responsible for as a total of a pension liability? Plans fiduciary, basically the government already is responsible for that. How much are they responsible for that? Because if some people leaves, they may not be able to do what? They may not be able to get that money because they left prematurely. So how much are they responsible for? The net pension liability as a percentage of the covered employee. What's the pension liability? Covered means they qualify for the plan. Also, you will need to show actuarial information. How did you come up with that pension? Pension liability is an estimate. It's a huge estimate. It's a major estimate. And when it comes to estimate, you will need actuarial people that's going to make estimates about this. So you need to show them how much was the actuarial determined contribution. When they told you to contribute, how much was that? Because an actuarial scientist, will tell you how much to contribute, the total amount of the contribution. Also, when you make this assumption, actuarial assumption, you make key assumptions and methods. You're just going to have to guess how long the people's going to work for the government, how long they're going to live afterward. All of those are what? Are estimates. So as a result, you need to show the money weighted rate of return on the pension investments for each of the past 10 years. Because you have money invested, how much that money is earning. What's the percentage that it's earning? Because it's going to be invested in stocks, in bonds, in real estate, in various investments. Also, you have to show an explanation of the trend and the amount reported in the supplementary information. You have to show what's happening over the years. Was there any changes in the benefit terms? And government, as well as companies, if they have a pension plan, they might change the benefit. They might give you more, they might give you less. You have to show the changes. Any changes in the employees, the number of employees that left. Sometimes what the government would do is they might pay some employees up front to ask them to retire. Any shift in the population, any changes in the employee structure. Any adjustment made in the assumptions. When you make those assumptions, for example, on average, a male employee would live 10 years or 15 years after retirement. A female would live 20, 25 years. Those are assumptions. If you made any assumptions, disclose this information. So you want to disclose as much information as possible about the pension and actuarial assumptions. Other supplementary information, that's an optional section. This will include variances. Remember I told you would show the budget, any amended to the budget, and the final figures. You don't have to show variances. Under other supplementary information, you would show the variances if you choose to, between the originally adopted budget and the final amended budget, and various between the final amended budget and the actual figures. You could also combine statement of non-major funds. And the last section is the statistical section. What I'm going to do now, I'm going to show you the annual comprehensive financial report for the city of Philadelphia, show you where all these information fits in the report, and just going to give you an overview what it looks like. The best, choose your city, go to your city, download your report for your favorite city, and look at it. So this way you'll have a better understanding of this topic. So this is the City of Philadelphia Annual Comprehensive Financial Report. So if we look here at the table of content, we're going to go down. For example, we already discussed the MD&A. We already discussed the notes to the financial statements. Now we're going to be looking at the required supplementary information other than MD&A. And it's going to include budgetary comparison schedule for major funds. It's going to include post-employment benefit. It's going to include additional notes. And it's going to include other supplementary information. And it's going to include a statistical section. So what I'm going to do, I'm going to show you real quick at least one section of the budgetary comparison just to give you a good feeling about what it would look like. So this is the required supplementary information section, starting with the general fund budgetary comparison schedule. What they have is the original, the final, which is the amendment. So this is what they originally planned in tax revenue, 3.4 million. They got 3.9, and the actual was 4.1, which was more, and they have the variance. So notice here, the city of Philadelphia does have the variance. They don't have to have the variance. They could have the variance and the other supplementary information, but they have it here. Locally generated non-tax revenue, same concept, 364,000. The final was 373, and the actual was 396, and it was a favorable variance. Notice revenue from other funds was unfavorable, and they do the same thing for the expenditure and encumbrances. So this is one section, which is again the budgetary comparison schedule. Here you would see the schedule of changes in the net pension liability and related ratios. Now bear in mind, this is going to be on 2 pages. Notice starting for year 2021, 2020, 2019, 2018, 2017. And if you scroll down, it's going to be even further for further year, 2016, 2015. That's why the numbers are a little bit small, because you're showing data for 10 years, but that's also something you have to show. And you could also have what's called a statistical section. Here you could just talk whatever you want to talk about in form of statistic. For example, here, table 1, net position by component, changes in net position, revenue capacity, debt capacity, demographic and economic information, just anything you would like to, any numbers, anything you would like to tell your users about the city, your investors about the city, you can add here in this statistical section in form of figures. So this is basically an overview of the required supplementary information. What should you do now? Go to Farhat Lectures, look at additional resources that's going to help you, whether you are studying for your CPA exam or your governmental accounting courses. Invest in yourself. The CPA exam is worth it. Accounting is worth it. Good luck, study hard, and of course, stay safe.